over Form SSA-44, Medicare Income-Related Monthly Adjustment Amount Life-Changing Event. So we're recording this in December of 2024, and this is an update to a video and an article that I've been publishing every year for the last several years. There are a couple of minor changes in this form compared to 2023 and prior. They don't really change the mechanics of this form too much. I will highlight them when we go through it. But basically, the thing is you should have received a letter from the Social Security Administration probably around the end of November or the beginning of December if you are subject to what is known as an income-related monthly adjustment amount, or IRMAA. And this is specifically for people who are on Medicare. So if you're not enrolled in Medicare, this won't apply to you. However, if you are 1 to 2 years out from enrolling in Medicare, you may want to pay particular attention to how your taxes will impact your IRMAA charges and what you can do about that. So we'll go through the mechanics of this form, but basically this is what it does is it asks the Social Security Administration to take into consideration certain life-changing events, and specifically that's the term that the Social Security Administration uses to reduce or eliminate your surcharge if your taxable income went up significantly in 1 year and you think that this is just a one-time event. So before we get into the form, we'll cover what types of events are covered. So and this is actually in step 1. So we're getting ahead of ourselves a little bit. But the basic life-changing events that the Social Security Administration will consider for purposes of reducing or eliminating your IRMAA are if you got married, if you got divorced or your marriage was annulled, death of a spouse, work stoppage, which indicates that you either retired, which a lot of people that are in this situation may face, or you stopped working because of disability, or you took a sabbatical. Any of those things, it just says work stoppage. Work reduction, so if you significantly reduced your working hours, maybe you didn't retire, but you went from full-time to part-time work, that would be considered. Loss of income producing property. We'll get into the details in a little bit, but specifically, this is an involuntary loss, not the sale of income-producing property. For example, if you had a rental property that was destroyed in a fire, that would be considered. But if you sold your rental property, that would not. Loss of pension income. So if you had a pension, but for some reason the pension went away, that would be considered. And then finally, an employer settlement payment. So those are the 8 different life-changing events. That doesn't necessarily have to have caused your change in income. It just has to have happened in the same year that your income changed significantly. So we'll go to the top of the form. If you're completing this form, you would put your name and social security number. For married couples, it is important to note that the Social Security Administration takes this tax information from your tax return as reported to the IRS. So if one spouse in a household is impacted by IRMAA and both of them are on Medicare, both spouses will be impacted. So if one of you received a letter but the other one did not, then you should probably contact the Social Security Administration because you should be expecting a letter for each spouse based on your tax return. So each spouse would also have to file the form SSA-44 if you qualify to eliminate IRMAA for each spouse separately. So the one thing that I noticed when I was reviewing this form is that these what's known as modified adjusted gross income brackets are based on the 2024 tax year. And the reason I verified this is because I went to the Center for Medicare and Medicaid website and actually pulled down the 2025 listings, and they have different information on them. So I do know that is the case. So I expect that the Social Security Administration should change this in the relatively near future. And realistically, the change is that the modified adjusted gross income amount, the thresholds go up a little bit. So if you're on the borderline, you may be able to duck under it. Just double check to make sure that the numbers are correct in the letter that you received and on your IRMAA form, because this is not correct. You'll need to make sure that you're getting the correct information from the CMS website. But as an illustrative example, we'll use the 2024 numbers. So let's imagine you're a single taxpayer and your modified adjusted gross income was $120,000. You could expect your Part B monthly adjustment to be $69.90. This is, again, for 2024. The 2025 rates are actually published online. I've updated the article on our website to reflect the 2025 rates. Your prescription drug coverage, which is your Medicare Part D, would be $1,290. Again, so for a married couple filing jointly, you can expect that at these tax brackets, each spouse would be paying an additional amount. So for the rich tax filers that are earning more than $750,000, this $500-ish per month is per spouse. So each spouse would pay their roughly $500 a month or $1,000 extra. And then married filing separately, if you lived with your spouse during part of the tax year, there is a different set of circumstances than if you lived with your spouse or if you and your spouse were completely separated. So how to fill the form out? What you'll do is you'll check the applicable box. Let's just say that John Doe up here was making $120,000 and he got married during that tax year. So he would enter the date of that life-changing event. Let's just say that, and this is really month and year. So let's just say, they got married in July of 2024, and then he would go to step 2, and this is a little bit more confusing. This is one of the areas where they changed the guidance slightly. I think it might be a little bit more confusing, but basically, if you already have a tax year where you can actually see that your income was impacted by the life-changing event, then you would enter that information here. And then in step 3, you would say anticipated reductions in your modified adjusted gross income for the following year. So it doesn't necessarily have to be a reduction of income. For example, if you had let's say an employer settlement payment, which I actually did for a client of mine one time, that actually resulted in an increase of income. And that meant that during that tax year, their income actually went up. And then the following year, it went down to a much lower and sustainable level. So you need 2 pieces of information from your tax return. You need your adjusted gross income, which is what's reported on line 11 of your Form 1040 or 1040 SR. And then, so your 1040, that That's the instructions. I was trying to find the actual 1040. Let's see the Form 1040 SR. Your line 11 is your adjusted gross income. So that's where you would pull that number from. And then you also need your line 2A, which is tax exempt interest. So those are the two pieces of information. And let's just say that John Doe was impacted in 2023. His adjusted gross income was $120,000. And then he had another $5,000 of exempt interest, and that's the total would be $125,000. If he was single for that tax year, but now he is expecting that his 2024 income, which is not going to be, it's not necessarily going to be lower, but it is going to be the same. His new spouse doesn't have any outside income of her own, but we're going to put that it's the same income. And what we're telling the Social Security Administration is that they got married. And so even though he normally would have been in this MAGI bracket with this IRMAA surcharge, as soon as he gets married, he falls under this, which means below $206,000 of modified adjusted gross income, he doesn't need to pay the Part P surcharge. So the form is a little clunky in terms of what you're supposed to report on it, but the mechanics are still the same as they have been for the past few years. You report the type of life-changing event, you report the income as it was, and then you report what you expect the income will be going forward. And then in step 4, you're going to provide evidence of your life-changing event and your modified adjusted gross income. So you can do one of two things. Either you can attach everything and the Social Security Administration will mail everything back to you, or you can schedule an appointment at your local Social Security office where you can show these documents to a Social Security Administration employee. They will make copies, put them in your file, and then you walk out of the office with your original documents. So you would need to provide your tax return for the affected year, and then we're going to talk about what the required documentation looks like. So in step 5, basically, you're going to sign and put in this information here. So your mailing address, city, state, zip code, your phone number. If you live in an apartment, you would put that in as well. So the following information on the back is just, there's requisite information about the Privacy Act, seeing that the IRS shares your information with the Social Security Administration. You do know that the federal government has the right to share appropriate information to other federal agencies, when it's required in cases such as this. So the Social Security Administration needs your tax information. They get that from the Internal Revenue Service. The Paperwork Reduction Act statement is a federal law that basically says all government forms need to have an estimate of how long it will take. According to this, about 45 minutes to read the instructions, gather your facts, and then answer the questions. There are additional instructions here. Step 1, it lies out exactly what the definition of the life-changing event is. Entering into a marriage, those are pretty straightforward. If you stopped or reduced your hours, the loss of income producing property. This might be the more confusing one. Again, it has to be not at your direction. This could include a disaster area, like a presidential, like a FEMA declared disaster. If you had livestock or crops, the destruction due to natural disaster or disease. If you lost investment property because of fraud or theft, or if you had, a piece of real estate that was lost due to arson. Loss of pension income, again, a cessation, termination, or reorganization of a pension plan from your employer. And then finally, the settlement payment if you received a settlement from an employer because of their bankruptcy or reorganization. So there's additional steps for how to complete. We just walk through that. What I'm going to get to is the required documentation. So you would see, you need to provide the copy of the tax return or a transcript from the IRS with that official information from the year. So if you're using the 2023 tax year, you would use that. And then you need evidence of the life-changing event. So for marriage, a marriage certificate or a certified copy. Divorce or annulment, you would need a copy of that. Death of your spouse, you can use a death certificate. One of the reasons when you have a death of a loved one, the funeral home can grant you, copies. Generally, I've advised clients to just get 10 copies of a death certificate because it seems like everyone needs proof of that death before any paperwork goes forward. But as soon as the death certificate is there, then the paperwork goes very fast wherever it is, whether it's a financial institution, whether it's, in this case, your Social Security, it gets processed pretty quickly. So I've always told people to order 10 copies plus. You'll never regret getting an extra couple of copies, but you might regret not getting enough. Work stoppage or reduction, you can use pay stubs. You can use a signed statement from your employer. If you sold your business, you can use original documents that show that you sold your business. You can also write a letter under the penalty of perjury that you partially, there's a misspelling all over here. So I don't know what those two words are, but I think what the SSA means is that you partially or fully stopped working or you accepted a job with reduced compensation. So whatever you can use, for example, you could use pay stub from old employer and new employer, stuff like that. An original copy of the insurance adjuster's statement, or if there was investment fraud, you would need to prove that the conviction, that there was a court document. That's very similar to the requirements for like a Ponzi scheme, being able to claim that as a loss for tax purposes. Generally speaking, you have to be able to prove that there was a conviction before you can get the government to relieve you of that responsibility. So same case here. It's not enough to just have an open investigation. You have to have an actual court document. Loss of pension income. So this would be a letter or a statement from your pension fund administrator that reduces or terminates your benefits. And then finally, an employer settlement payment, a letter from the employment stating the terms and how this impacts you or your spouse. So, if you do state, a lower income in a future year for which you haven't done a tax return, and I'll go back up to step 3 in just a second. So you haven't filed a tax return for 2024. The Social Security Administration will go back and verify this with the IRS to see if it's somewhat close. You might get that reduction in IRMAA, but if they go back and find out that your taxes didn't go down at all, or that you didn't really have a change, if you expect that your income will go down permanently, then you should be okay. If for some reason your income keeps you in a IRMAA status in future years, then the Social Security Administration may come back to revisit this with you. So there is kind of an incentive to be a little bit more forthright and honest when trying to get out of this year's IRMAA determination, because if the Social Security Administration takes a look at your taxes and determines that there was never any change in your income status, like if you were making $500,000 a year and you said, well, I retired, so I'm only going to be making $80,000. If they come back and find out that you had investment income of $500,000 every year, then they might come back and reapply those IRMAA charges. So be sure that just because you met a life-changing event criteria, you should, also be sure that your income was actually impacted by that. So this form, this recent version, does have a couple of things that might trip you up and confuse you. We've covered all of this in our article, which you can find on teachmepersonalfinance.com. If you go there, just type in form SSA-44 and you'll see our revised article. If you like our articles, please feel free to subscribe to our newsletter. If you like our YouTube videos, please subscribe to our channel. If you have any ideas for upcoming videos, please hit me up in the comments section. I do want to make one last note. People do reach out to me about their specific IRMAA situation a lot by email. I can answer comments to the best of my ability, but I won't be able to address anything directly by email due to the time constraints. I just have so many emails. So if you would like to get in touch with me, I'll put a link in the show notes. I offer a paid service. You can schedule what's called an Ask Me Anything appointment, and you can see my calendar, and we'll walk through step by step every part of your form SSA-44 until you're satisfied that you've got it correct. So please take advantage of that. And if there are any other questions, please post them in the comments section. Thank you very much and have a great day.